Welcome to the recap of the 38th day trading this Apex Trader funded account, where I'm trading with Apex's money and keeping 90% of the profits and none of the losses. Apex is actually doing a massive Labor Day week sale right now. You can sign up for your own Apex account with my link in the description and use my coupon code for 80% off your first month and 50% off all recurring months. So before we get into today's trade recaps, I want to share a devastating after-hours trade I took earlier this week that highlights one of the biggest dangers of trading when there's very low liquidity: slippage. Here's a trading view replay of what happened. So I was doing some charting one night and noticed that there was some very clear bearish AD divergence in the after-hours price action. AD was making lower highs when price was making higher highs, and stochastic was also curling downwards. I wasn't really planning on taking any after-hours trades, but I had taken a small net loss that day, and now I stumbled upon this perfect bearish setup. After seeing price start to drop, I decided to go for it. I knew that price moved very slowly during after-hours due to very low liquidity, and I didn't want to be in the trade for too long, so I decided to enter short with 4 contracts at 4,004. I was just going to target 3 points at 4,001, right above the VWAP band, and set my stop loss at 2 points at 4,006. Basically, I was risking $400 to target $600 in profit, or so I thought. Here's how the trade played out. So initially it goes my way. It actually misses my target by 1 tick before reversing back up. So at this point, I'm obviously pretty frustrated about missing my $600 profit target by 1 tick, and I'm prepared to just take the $400 loss, which would be about a $1,000 swing. But then, all of a sudden, bam, out of nowhere, a massive buy order hits to fill every single sell order up through 4,014. And my stop loss order that I set at 4,006 gets filled at 4,014. So in 4 contracts, this resulted in a $2,016 total loss. So not gonna lie, this was absolutely crushing, being so close to taking profit to taking 8 points of slippage on my stop loss order. I wanted to blame the market, but in the end, it was completely my fault. I knew that trading after hours, where there's such low liquidity, put me at an increased risk for slippage, and so in taking this trade, I exposed myself to that risk. In addition, knowing these risks, I foolishly chose to enter with 4 contracts, probably because I was overconfident after having so much trading success this month. Anyway, this brought me back down to earth real quick. I was super disheartened at losing about 2 weeks of trading profits in one dumb trade, but if I want to become a consistent trader, these are the tough lessons that need to be learned. Now I fully understand the risks of trading during times with low liquidity, and have better internalized the fact that the market is just wildly unpredictable, as you never know when a big trader will market order into a massive position. Anyway, I wanted to share this experience not only to be fully transparent about my own mistakes, but also to warn y'all about these risks as well. The next 2 days of trading were honestly pretty frustrating. I don't have edited footage, but I was trying to go for home runs to try to make up for that huge loss, which just isn't my style. My strategy was effective, but I kept finding myself in trades where my profit targets were too aggressive, and I get stopped out for much lower profits on retracements. Thankfully, was still able to be overall profitable these days, but could have made a lot more had I not set such aggressive profit targets. Anyway, I'm clearly falling into the same psychology pitfall of putting too much emphasis on profit and loss amounts, but I just can't help it. In total, from Tuesday, Wednesday, and Thursday, I netted a loss of $1,560. So this was a bit of a risky trade, as I went short against a strong uptrend. But I saw all my indicators in confluence, and to adjust for the risk, I set a more conservative entry that was above where I normally would have entered. Buying pressure was so strong that I expected price to push above the supply zone, so I set my entry at the very edge of it, and sure enough, price pushed slightly past it before flushing right back down. This phenomenon is called a swing failure pattern, or SFP, where price will sometimes push past key levels before reversing. This tends to happen at very obvious levels of support and resistance, so I tend to set more conservative entries and or set wider stop losses when taking trades here. Anyway, this trade worked out beautifully. I barely take any drawdown and get a nice 10-point scalp. I made a bit of a mistake on this trade. I meant to set my stop loss at 6 points, but forgot to update my default settings, which was at 5-point stop loss, and I get stopped out prematurely by accident. Just a brain fart on my part, and I have to be more careful about this. After getting stopped out by mistake, I see price start to bounce back, and I immediately re-enter long. First at 39.54, then average down at 39.50 to try to get my average cost back down. This second ad was just an undisciplined decision that was caused by my frustration of getting stopped out by mistake, as I broke my rule of only increasing size if AD divergence increased. I quickly realized this when my indicators start showing that selling pressure was increasing, and I decided to exit after seeing price pump up randomly. Not happy with this trade, but feel lucky that I'm actually able to basically break even after this unfortunate series of events. So after price initially does increase after my entry, it gets rejected pretty hard by the 9 EMA and the 0.382 downtrend fib level, which spooks me into closing the trade early for a small 2-point profit. Well, right after I get spooked out of the last trade, price rockets up with authority, and I hop back in long on a retracement back to the 9 EMA. This time, my indicators show that bullish momentum is increasing, and I try to increase size on another limit buy, but unfortunately it doesn't get filled. I'm happy to take profit at the 0.786 fib level and get a nice 6-point scalp here. Overall, I'm pretty happy with my trades today. With the exception of a few mishaps, I still followed my plan and booked a solid $926 in profit today. The account now sits at $56,303. That slippage disaster made my equity curve look even more like a roller coaster, but we're on the way up again. I also added some labels to the notable events that happened during the life of this account, so it's more clear to my viewers, and also to remind myself of the mistakes that caused some of these big equity dips. As always, thanks for watching. Please leave a thumbs up if you enjoyed, and subscribe to join me on my journey as a prop firm funded day trader.